Welcome to the art and science of smart investing. In Part 1, NewSquare Capital's Joseph Rizzello sits down with Tom Dorsey to reflect on 50 years of market change, from Mayday to the digital age, and to explore how a century-old method, point and figure charting, captures the timeless law of supply and demand. You'll also hear how Tom built one of Wall Street's most influential research firms, Dorsey Wright, and why education has always been at the core of his work.
Hi, I'm Joseph Rizzello, Chairman, CEO of NewSquare Capital, and welcome to our no-holds-barred conversation with Tom Dorsey. Tom, I want to start with recapping because May 1st, 2025 was the 50th year anniversary of Mayday. Right. What was Mayday? Mayday was what, Tom?
Well, we went through negotiated commissions then. Right. Went from fixed commission to negotiated commissions.
Changed the world.
It changed the world. I'll tell you what, I was at Merrill Lynch when that happened. I mean, not just Mayday, but when Charles Schwab came on and offered discount brokerage, that in itself upset the whole apple cart. Yeah. Now what do we do? Because this has started and it's going to continue. Yeah. It's not going to stop. I mean, I can remember when I was a broker at Merrill Lynch, just getting an order executed, you had to write the ticket. You put it down a pneumatic tube. It went to the teletype operator. He took it, typed it in a teletype, went up to New York. New York guy ripped it off the teletype, went out to he was a runner, went out to the post, the crowd where IBM was, got the order executed. He didn't execute it. He had a broker, registered broker, execute it. He then took back the execution to the teletype operator. He then typed it back to Richmond, Virginia, and ultimately, I hear that pneumatic tube plop down. So, I have an execution.
Yeah,
and it took that long. That took that long. Now today, the second you put the order in, it's executed.
Yeah. Well, yeah. You press the button, send the orders come. The reports coming back to you, and you got to think about why that is. It's the advent of the algorithmic traders, which changed the trading floors forever. Computers, technology, the X factor. Just makes everything work faster and better, more efficiently, taking cost out of the system. That, as I said, that $1,200 trade in IBM back in 1974, it costs you nothing today. And executions happen in microseconds. That's why we can process a 30 billion share a day without a blink. Options, which is a strategic investment, a tool to do many, many things to protect against to use as a risk tool, although many people associate options with a speculative investment, right, which it can be, just like an individual stock can be. And people have realized that options are a tool to be used strategically in a lot of different ways in our industry. And so the education through the years has worked tremendously. 70s and 80s and a good part of the 90s, mutual funds became the investment for Main Street. You got diversification, right? Mutual funds exploded in the 80s and the 90s.
We used to call it diversification.
Yeah, diversification.
Diversification.
Why is that?
Because we weren't doing the selection.
Yep.
We weren't doing the selection and earning the commissions on each trade, putting them together, creating your own mutual fund in the customer's portfolio. Now they just did the whole thing right there, and it was very, very inexpensive.
Yeah.
And then from that, I mean, you were one of the pioneers in the pioneer in exchange-traded funds. You brought the very first exchange-traded fund to the market. And today, if you ask anybody on Wall Street who brought that first to market, they say somebody else.
Yeah.
They have a vested interest in saying so-and-so company brought the first one. You did. We traveled the country
promoting it.
Yeah. It was amazing, and people loved it.
Yeah, no, so it's interesting. I remember today there's over $15 trillion in exchange-traded funds. And by the way, the last 3 years, mutual funds themselves have bled assets. In other words, they're taking in more money's going out than coming in. And I know that I remember presentations I participated with you in some years ago where you did the study showing that ETFs were going to take over. I remember that whole concept. You're right. I led the team at the Philadelphia Stock Exchange and brought the forerunner to the first ETF. The first
Right.
ETF, if you want to say it that way. Nick Giordano.
Well, it wasn't called an ETF. It was the Cash Index Participation Unit.
Yeah, but it was on the S&P 500 and the Dow Jones.
And you could cash out daily.
So I remember Nick Giordano, who was the CEO of the exchange at that time, came to me. I headed up new product and development. Honestly, Tom, when I came into this business when I was a young man in the 70s, I had no idea I would get involved in product engineering, right? And it was people like you who were working for the regional firms that were talking to the clients, that were generating a lot of these ideas. And Nick Giordano said to me, Joseph, he said, wouldn't it be great if we could take a mutual fund and list it on a stock exchange and let people buy it like it's stock, where it's a continuous trading? That's where the idea was born. I don't know where Nick got that idea. Maybe somebody told him about it. Maybe it was his own vision, okay? But I would argue that exchange traded funds are the most inventive, successful financial product to come to market in the postmodern era.
Well, the things you can do with them.
Yeah.
How you can put them together. I mean, you like you're making a fantastic dinner, you know, and you've got the salad, you've got the main dish, you've got the dessert, and you put them all together. But what you guys did at the Philadelphia Exchange even preceded that.
Yes, we preceded.
You never mentioned, I never hear you mention what you guys did. It was important to me because I was running the Wheat for Securities Option Strategy Department at that point in time.
Yeah.
And you had created like the SOX, which was the semiconductor sector, where now you could buy a group of stocks all at one time, or the XAU, which was the gold.
Yeah. Well, I
Man,
mean,
that to me, somebody who's running an option department, that was future.
I mean, like the
And that preceded.
Yeah, you're right, Tom.
ETF.
We were early on in the sectors market. The S&P has 11 to 12 major sectors. You know, technology, consumer discretionaries, consumer staples. We can go on from there. What we did at the Philadelphia Stock Exchange is, on our options floor, we listed options on the gold and silver index, XAU. We listed options on the utility index, UTY. We listed options on the bank index, BKX. We then went to subsectors like the oil service index,
Right.
the semiconductor index, because it was folks like you that were demanding access to different sectors of the market. Back then, we used to call them sub-indices.
Right, exactly.
Now they're sectors.
Now
You know,
sectors.
everybody, because that's what they are, sectors of the broad market. And when ETFs came, it was pretty easy to say we're going to put the ETF wrapper
Right.
on those sectors. And by the way, XAU, BKX, SOX,
Trade
all of them
today.
are symbols on all the financial. They're household name symbols on all the financial services, news reporting firms, financial news reporting firms. So, Tom, tell me, you and I met back in 1985, and 40 years ago. You were in the business 12 years. I was in the business a little bit longer than that, maybe 13 or 14 years. And I was working for the Philadelphia Stock Exchange. You were part of a regional roundtable, not the big wirehouses, the regional exchange.
Right.
The regional firms stuck together, and I was asked to come and present what we were doing at the Philadelphia Stock Exchange. You and I became instant friends. We remained friends for 40 years, worked together, did a lot of things together. Tell me how you wound up in this industry, and I want to hear about one of your greatest achievements, and that's the advent of one of the hallmark research firms in our industry, Dorsey, Wright Associates. So tell me how this all started.
Well, it all started, I guess if you even took it back a little further, it was me flunking out of junior college. And I had to go in the Navy, and I spent 4 years in the Navy in Vietnam. And I'm dyslexic.
Yeah.
So for me, reading was very difficult all my life. And I actually, when I got out of the Navy, I had to teach myself to read. And I went back to that 2-year school, and I finally got the 2-year school in, and I transferred to Virginia Commonwealth University, taught myself to read, and graduated there. So that was Once I got that degree from Virginia Commonwealth University, I put that up on the wall and said, I can do anything. I can be an astronaut if I want. Look at me, I graduated. So is that important? So on my senior year, I'm there, and I'm talking to a friend of mine, and I said, I don't know what I'm going to do when I graduate. I said, I am tired of being poor. I said, I'm driving a Chevy Vega with no reverse in it, and I learned something about life on that. You got to keep going forward. Don't go. You can't go backwards. So I said, I'm tired of being poor. He said, why don't you go where the money is? I said, what do you mean? He said, Merrill Lynch across the street. That's where the money is, stockbrokers. I said, what's a stockbroker? I didn't have any idea, but I liked the idea of making money. So I went across there and I applied. And they said, heck no, you ain't coming in here. No brokers are coming in. This is 73, 74. People had just been wiped out. I mean, they probably lost 60% of their portfolio. Here I am, I would be a 20-something kid coming in and trying to help them. So I went to Richard's Wine Cellars, to make a long story short, was a production supervisor there. And things in your life happen by accident. Think of all the things that have happened by accident.
By accident, but for good reason.
For good reason, exactly. A friend of mine who was an officer, Green Beret in the Army, went to a career counseling meeting. Now, I was just an enlisted man. They weren't inviting me up there. He went there as an officer and came back. He said, Merrill Lynch is hiring. I said, you're kidding me. I went back to that branch in Richmond and badgered that branch manager. I sat in this waiting room day in, day out, till he finally said, I'm going to give you an interview. That's when I got hired. Now I'm going to be a stockbroker. I still don't know what they do. So I went through studying for the Series 7 exam, went to New York City, passed the Series 7 exam, and then came back to Richmond. Now you have to prospect. Remember back in the days, they didn't sit down and say, oh, here's the account you're going to manage.
Back then they called us stockbrokers.
That's right, we were stockbrokers.
Today, and for good reason, they're financial advisors. So they get the training, the proper training, and financial advisors serve a different purpose than just stockbrokers. But go ahead.
Stockbroker, the training that we basically had, I mean, how to write the order, that type of thing. Customer will call up and say, what's hot, what's not? And that's so your day was like you see on TV on Wall Street. It was wild. People were trading. And prospecting was very, very difficult. I remember being told to go to hell on the phone. I remember a woman asking me, she said, you're a stockbroker, right? Well, that's what the last one did with me. Made me just that, broker. Phone slams down. I'm thinking, this is going to be a tough business. I never thought about it. Here I am, 20-something kid, riding in on a white horse. I'm going to fix everybody. No, they don't want to be fixed by a 20-something-year-old kid. So I said, if I'm going to be successful in this business, I better do something that no one else is doing. So I looked around the branch. Who's doing? Nobody's doing options. They debuted 2 years before that. So then that's my direction, options. And I went home weekends with legal pad and pencil and did basic fourth grade arithmetic, dividing this. I buy the stock here. It goes up 10 points. How much did I make if I had a call? What if I had to put it? I did it by hand. Man, did I learn that business like crazy. Well, that allowed me to become the branch option coordinator. Meant nothing. I didn't make any more money. I could just help you write an order.
Yeah, options came to market in 73 and 74, so you were early on. You were one of the early pioneers, right?
And only because it was so tough prospecting for stocks.
Right.
I said, nobody's doing options. So I went across, it was exactly across the street. And I went over there and I started the option strategy department there at Wheat First Securities. I was in seventh heaven. So that's how all that happened. And everything happened to me by accident. You walk into something good that hits you in the face and you grab it. But I knew Wall Street was for me. There was no question. I could not do without Wall Street.
I mean, all these years later, you and I, we can't get away from this business. We love it so much.
Cannot get away from the business.
It's not like a job.
I do it every day.
Yeah, it's not like a job. It's a hobby.
That's right.
Right.
I manage some accounts. I don't charge anybody anything, but it's just keep your hand in it.
Yeah, no, it's in your blood. And by the way, product development, use of options, all of those kinds of things are put to work to help clients succeed and build wealth over the long term, and to protect that wealth.
That's right.
Yeah.
Exactly, because options give you options.
Yeah. So you did that for you did that for 12 years or so, and then I remember the day you called me at the end of '86, beginning of '87, and you said, "Joseph, I'm leaving Wheat First Securities, and I'm going to start my own research firm, Dorsey, Wright and Associates." And I said, "What? Are you crazy?" Tell me about that. The idea.
Well, another thing. Well, the idea of it came when I started that department. The first person I hired, wonderful man, Steve Kane was his name, and he.
When you started at Wheat First.
Yeah.
Through that, the idea of Dorsey, the idea of building a research firm called Dorsey Wright came about. And I'll say, because I don't think there's a brokerage house that you can walk into on Wall Street today that doesn't have the research that Dorsey Wright produces on a daily basis. So if you've educated literally tens of thousands of financial advisors, not only in the United States, but worldwide. As a matter of fact, you had the Dorsey Wright Institute, where you would do these big seminars a couple of times a year, where you would bring people in, you'd have guest speakers. I spoke at those conferences a couple of times. So talk about Dorsey Wright, how you got started, what you were willing to leave behind and put yourself in debt to form, and turned out to be wildly successful, not only from a financial point of view for you and your family, more importantly, to tens of thousands of advisors and millions of clients that worked off of the kind of research that you produced.
Here's the idea of Dorsey Wright came when I realized what this point and figure methodology was all about. To me, it was God sent. And I thought about a little old lady who lived out in the country that would have a better life if she was dealing with an advisor who was trained and supported by us. That was it, nothing more. Nothing grandiose, I'm going to make millions of dollars, none of that. It was that reason, an altruistic reason. And in this business, or probably any business, if money is your object, it's not going to show up. And money wasn't my object. Helping her was. And the way I would be able to help her is not myself, because I can't go out and talk to all these individual people. I need an army. And that's what Wall Street was, an army of these guys and girls and smartest people around. And I said, if I can educate them and get them interested in helping other people, then I've done what I need to do. And money was never an equation.
So you created an instrument that basically was a guidepost to how people can have their money managed in the stock market or in the bond market, anything that trades on an exchange or anything that has a price to it. And you built a research firm around that lasted 30 years before you sold it to NASDAQ back in 2015 or 16.
And the only reason I sold it to NASDAQ in 2015 was as technology was getting higher and higher and higher, and it's costing more and more, and we had to stay with technology. NASDAQ was the play.
Yeah.
They had it already. They could come and take the baton from me and expand it.
Yeah, so Tom, tell me, in those early days, point and figure charts, okay? You were doing them by hand.
Oh, God.
And just the quick evolution of how Dorsey Wright evolved.
Well, what we did is I knew we had to have a handle on all of it. There was no computers that did the work for us, no technology. We updated 2,500 charts every day, point and figure charting. I had 5 analysts, and they would take 500 shares, 500 stocks, and they would update those 500 stocks that day, pass that book to the person on the right. He does it the next day. Someone passes it over to him. And that was essential to me, because I wanted to be able to see every single stock. I wanted to be able to write down those stocks that gave a buy signal, column of X's exceeding a previous column of X's, fourth grade stuff, or stocks that gave sell signals, column of O's exceeding a previous column of O's. And we would do, each person would do 500 and pass it off to the next person. So by the end of the week, they had seen all 2,500 stocks. When we finally got technology, and this was like early 90s.
As technology advanced.
I couldn't get those books out of their hands. I had to pry them out. So we did 2,500 by hand then. You know what they do now at night? 40 million.
40 million charts.
Yeah.
And it's a press of a button.
Yes, a press of a button, because the chart, not only the trend chart, you see, then you have relative strength on it, it's part of a sector, there's all kinds of different permutations and combinations that you want to look at. And now what you can do is you can tell the computer, list me out the stocks that just did triple tops last night.
Yeah.
Or those that have positive relative strength, broke a triple top and has pulled back to support. You can do anything.
Yeah, so as we get near the end of this segment, Tom, I remember what I really admired about you and Dorsey Wright, the firm, was you were committed to education, and you assisted and helped literally thousands of financial advisors so that they can help their clients help them build their wealth. With the use of research reports and things that you produced out of Dorsey Wright, and particularly the use of point and figure and marrying it with relative strength, which we'll get into in the next segment.
And that was for their advisor.
Yes.
It wasn't for the individual.
Because in my long career in this business, and by the way, how you and I got together was we were doing financial engineering and creating products like ETFs, which by the way, became the asset allocation tool years later for money managers like us, right?
Absolutely.
So when I say like us, like money managers, like NewSquare, the folks at NewSquare
Yeah,
Capital.
well, you're CEO of a money management company.
Right.
Now.
So the bottom line is I always believe, I say Wall Street, in quotes, the big banks, the big investment banks. I just think, unfortunately, when I grade them on the education that they do, I don't think they do a great job. It's folks like you and Dorsey Wright, and really what I've been involved with in my career, that lead with education, the importance of education, because we somehow or another try to turn simple investing into rocket science. It's really not. And the average person can understand it when you put it in plain words. With that, we'll close this segment. We look forward to the next segment where we'll get more into detail about
Let me add one
smarting.
thing before we close.
Sure.
One of the reasons that I think people can be successful in educating professionals is if you have a vision of what you're trying to do with it. My vision was always the little old lady out in the country, and it's a country house, up on a hill and that type of thing. Money was of no consequence. I think if people want to educate people on Wall Street or anything, you need a vision for why and who.
Yeah.
And once you have that vision, money is not going to show up if that's what you're looking for is money. It will not show up. So you have to have something else that guides you.
Yeah. I mean, I think that smart investing and you know this better than anyone, in its concept is simple. It's hard to do though. And that's the role that financial advisors play. They're the financial coach. When they're working with their client, they can impart their knowledge in terms of the simple concept of investing and building your wealth over time. The hard part, and we're going to get into that, is managing the emotional behavior. Because we all know that markets can be and are a lot of times irrational. And as humans, we're irrational and we're very emotional. So in the next segment, we'll get into the concept of smart investing. Thank you for joining today. We have a lot more to talk about in my conversation with Tom Dorsey, so please stay tuned for the next segment. Thank you.
In part 2 of The Art and Science of Smart Investing, Joseph and Tom turn to the psychology of markets and why fear and greed are often an investor's biggest risk. Stay tuned.